Hello, warriors. Hello, Face. Welcome, investing.com viewers, to FACE, which stands for the Forex Analytics Community Experience. How's everyone doing today? I just want to start off with, and I told you so, on Euro-Yen. Blake brought it up. The research showed this back test of a broken wedge. All we have to do is look at what's happening. That was a great call, great technical work by Blake Morrill. Hope people were able to participate on that. Show you the action that we have in Euro-Yen. From the back test was right up here. In fact, yesterday's Fed minutes just offered another shorting opportunity in Euro, Euro Pound, and Euro Yen, any of the Euro crosses. Still think there's some more downside left. In Euro Pound especially, we've been, you could call us persistent, you could call us stubborn, but we're finally getting the breakdown of the wedge. We haven't closed underneath it, but we tried it here. It was good for a scalp. Tried it here, and this was yesterday. So just, I want to show you this area right in here is a fractal of a 3 drive, because you have 1, 2, 3, and on the third you have 1, 2, 3. So you have a little fractal of it. Blake has this 90-50 level diagnosed as a breakdown point, and from there we should get some pretty good acceleration. That's right off this low. So both the Euro and Euro Pound are trying to hold under 90.50. I think you could be looking for 89.70, 89.50. Pound starting to look like it could hold in here. And being short Euro Pound makes Euro the preferred short, Pound the preferred long. So if we do get a rally and the dollar comes off, I expect the Pound to outperform on the upside. Everyone with me? Now that I think we have the top in on the rising wedge here on Euro Pound. Euro Pound's a great trading vehicle, but it's also a great forecasting tool. Okay, it's one of the best forecasting tools for trade selection. So as it's trending up, Euro Pound, you want to favor longs and euros on dips, and you want to favor shorts and cable, pound dollar on strength. And now I think we're very close to a rollover. Let's just take a little longer term look. Let's look at the daily. So you can see after this type of extension, this has been a great move to the upside led by Euro strength, that there's probably still a lot of people real long this market. 89 looks possible. Just looking for some type of fib retracement off this. Let's put it out there. And I want to welcome all the viewers from investing.com. We have a great show lined up for you. I have a very good guest. Ernie Veritimos is going to be with us. Ernie actually was a rocket scientist. And you know how they say trading isn't rocket science? Well, Ernie's a rocket scientist. So maybe sometimes you do have to be a rocket science, but we'll have some interesting questions for Ernie. Okay, so here we go. You know, just some simple fib retracements. 38% back is here. I have confluence at the 61.8 level. That's all the way down around 86. So this could be just be beginning. It may not be about Euro weakness, but it may be about cable outperforming Euro on the upside. I also have another treat for you, everyone. Nick is in the house.
Hello.
I know. Hi, Nick. I know there are a lot of Nicola Duke fans here. I'm one of them. I might be your biggest fan, Nick.
I'm just looking at my Euro Pound with you because, you know, for me, I will agree it's a reversal. If we get a close below 90.63,
okay,
because it's kind of stair climbing the fibs up. If you look at the decline last year from October to December, and you
know what I'm going to do, Nick? I'm going to pass you over the charts, because I look at my work all the time. right? So
Okay.
I get bored with my own stuff, but you know what? I'm never bored here because of the team. I mean, you and Greg
Got
and
it.
Blake and Stell and Volgy. So
We're so lucky.
you've got the ball.
So I'm just waiting for the pop-up to ask me if it wants me to share my screen.
Okay.
Yeah, share my screen. So,
And wildness in the crypto world, huh? I know
yeah,
you're.
it's been crazy. Let me see.
Yeah. I think one of the gurus, I read a tweet, Nick, said that he thought that it could be at 15,000 by the end of the year.
Did he?
Yeah, I forgot the name of the guy, but he's one of the, supposedly a Bitcoin guru. Maybe he had some longs he wanted to get off, but he's looking for 15,000.
Oh, you know what? I really do think it's going to go higher. Just let me change my screen because I don't think I've got the right one.
Okay. Yes,
Can you
Jess,
see charts?
yeah, Euro Aussie, Euro Kiwi, Euro CAD. Yeah, we talked about those targets yesterday. Congratulations to you, my trading warrior brother. Hi, Vandal, nice to meet you. There's Nick.
Can you see my screen with chart in it?
Yeah, we have it now, Nick.
Okay, here's the euro pound. If we put the fib retracements on from the high in October to the low in December, we've been climbing up those, and I'm sorry, my screen's gone crazy here. Got an alert going off for cryptocurrencies.
But they go off every 10 seconds.
They come off all the time. Okay, so from this high to the low, I've been looking for an 886 retracement and a bat pattern. Okay, projected from this low, and I'm looking for a 1.618 extension from this two-wave correction that we did at the start of the year. And we've been climbing up through the fib levels. So we found resistance at the 78.6. That was 90.63.
Right.
And now I'm looking that we're coming back to retest it for me here.
Yeah, yeah.
So as long as we stay above it and we don't close below 90.63, then I think that there's a chance that we continue higher to this 91.60. And you can see with the 61.8 here, that's what we did. We got above, we came back, we retested it and kept going higher. So the 50 was a bit messy, I must admit. But if I put the 38.2 on, we kind of did the same. We got above it, came back, retested it, didn't close below. So I'm going to watch the close today in euro sterling, and I'm only going to cut my longs if we close back below that 78.6.
Okay. And just a little history, Nick, because a lot of people that are here today don't know, but down in the lows in April and May, you turned very bullish, very constructive, and I think this was your target up here.
Yeah, and it was simply because of this ABC correction here, 1, 2,
Right.
3, and then as soon as we gapped up and then we continued, this was the election gap. As soon as we got this nice impulsive, then you could line everything up and say this is where we're going. So we're nearly there, but yeah, we're nearly there, but we're not. Well, thank you. If only they all worked like that, that would be great, wouldn't it?
Well, I don't know. I see your hit rate. It's you'd be on the all-star team.
I've got a couple of euro. This euro Aussie really has offended me. It did a perfect ABC correction, and then I thought we'd broken out from a really nice little bull flag here, and we were going to continue to the top.
Yeah.
And so this breakdown this morning and the continuation lower overnight, this is what alerted me to some euro weakness. And then when I looked at everything else said euro weakness. And then I found this gem of a setup in the euro New Zealand, which I'd been trading long. And then, when it stalled, so when this euro New Zealand stalled at the previous highs, I realized in this we'd also made this ABC correction and stalled at the previous highs. So I shorted this today. I did it as a pip at ForexAnalytix as well. And for me, the confirmation always is if we break back below the 23.6 fib. So for me, that's like a bull bear line. So if we go from this low to this high, this 23.6 fib at 1.60, I think if we can close below that on an hourly or 4 hourly, that we're going to continue lower to 158.50 and then 156 is my target.
Wow, that's a big trade. Your pound
Yeah,
Aussie pip is working out pretty well today too. In
pound
the last couple
Aussie.
days,
Yeah, what
yeah,
a sweetie
really
that was.
great. See another very great call. For people that don't know, Nicola Duke, her methodology is harmonics. So harmonics, you'll see things like Gartley's and all
Thank
kinds
you,
of different
Dale. You're so nice.
butterfly. You'll see insects and everything there. So that's one of the features of our service is we have specialists in different methodologies. Nick with harmonics, Grega with Elliott Wave. Blake is just a conventional, old style, old school, read the same Bible as me, Edwards and McGee. And Steve Volge is a candlestick guy. So
Steve's pretty, Steve can turn his hand to a lot of analysis, not just, can't he? He can do
I
a
think
bit
he
of
started
everything.
this business so he could pick your brain and Grega's
I think
brain.
he's secretly learning harmonics, and I'm going to have a holiday, and he can do it for me because he can do Elliott Wave too. So
I would be very quiet when he asks questions now.
okay, I will. Oh no, I don't mind a holiday. Are you kidding? So yeah, I was just looking at this. This is a daily of the pound Aussie, and this didn't make an ABC. This is in fact is much lower. I was looking for a back pattern which takes us down to 161, and just this little daily bear flag. I thought if this breaks in the pound Aussie, which it did, because it was all setting up bearish for me, that's how it lined up. One more push lower. That's what I was looking for. So yeah, that got pretty lucky.
So
but
we're
if I got
almost there at a major. What is it?
well,
Like
we're
a
nearly here,
daily,
but
weekly? Wow.
yeah, but if I'm going to go to, I'm
Weekly.
going to go. Yeah, that was a weekly, and I'm zooming right out because I do think that this, if that level breaks, I think obviously we'll bounce off it first time. Let me clean this up a bit for you. Obviously,
the buyers are going to try it within 40, right in here within 40 pips. They're going to try it.
But if we don't, let me put my fibs on this low to this high here. If we don't, I think that we're actually going to make a bigger back pattern because this is a 78.6 fib that we kind of need to hold on to. And if we don't, we'll go to the bigger back pattern than the 886. I'll make that really dark here, which is at 152, and that's going to be quite something. And what when I put Fibonacci projections on, I use the corrective bounces, so I'll go from this low to this high like this. I'm just going to change the color and clean it up.
And you make the point, Nick, that every instrument is kind of has its own unique type of characters and response to different fib levels.
Yeah, it kind of does. So yeah.
So I mean that's good to know because maybe one pair may really respond to 61.8.
Well, there's one thing that I will say about the Aussie, and half of this pair is the Aussie, and the Australian dollar loves an 886 fib retracement.
Like the S&P, you said.
Yeah,
the S&P was
78.6, but it's kind of been seeing some 886 lately. But yeah, but the Aussie dollar loves the 886, so this is why I'm kind of looking at this one. This is my target anyway, back to that level, but we'll see then. Obviously, a breakdown, I would sell a bounce and retest of it, but I'm not going to be greedy, Dale.
I know.
The market goes in little funny swings, isn't it?
Well, I know this from your long silver. You made a great adjustment, booked it before objectives.
I've been in and out of that twice. So
yeah, so
I must admit, if I had been able to quick enough, it went so quickly last night after the Fed that I unfortunately couldn't get it back on again. I don't think it's fair to put out a pip once it's flown. So, but definitely on a pullback, I'm watching this silver for another entry. I've still got a target up here at 1751 next in silver.
Yeah, but you're out before the sell-off was. The point I was making was you caught that nice wave up. It didn't get to your target. There was something there. I don't know if it was just, bulls and bears make money, pigs don't, and close enough for government work, or you saw something. Because that was one hell of a pullback. And silver, and who would want to ride that out? So
Yeah,
was a
that
great
was,
one.
yeah,
Yeah.
just a fib projection. Yeah, I think, plus I look at the sentiment as well. This euro dollar, I know everybody's looking at this euro dollar, this wedge, and you know that I'm kind of, I think that this is really important support, but I just want to say this euro dollar, I'd like to see an ABC correction, perhaps a little bit lower to 116.15, and I'm going to go to the daily. This is daily euro dollar. Hold on. Take away all my magic. I see us in a bit of a channel.
Yes.
A little bit of a channel, and so I think that perhaps if this wedge breaks a little bit lower, that we'll test the low of this. We've already got two nice touches, so a third touch of this rail I think will give us a really nice entry, and it's really parallel with this high and this high as well. So although I'm really fixated on that 116.85, 83 level, if it breaks, I'll be looking for an ABC correction in euro.
Where would that take it? Underneath the channel?
Yeah, so let's, yeah, it would take us to the bottom rail of the channel, so it would line up pretty nicely.
Okay.
So
Yeah.
if I show you one here, so that from this high to this low, from this high, that would take us to 116.19. That's the level I'd be looking to buy around here.
And then look for new highs in euro. What would be your next if this scenario plays out and this is a break to buy, which that's my bias. What
Definitely
would extensions give you in euro down the line?
I'm looking for 120.42 for my next target upside in the euro. 120.42, and then I think we'll bounce off that, and then 125.
Okay, all right. And you know, when you look at 125, that's going to be a pretty important area, because isn't that about halfway back from the 140 high to the 103 low?
It's the 38.2 fib retracement of the entire decline from the 2008 highs.
Right.
So that it's also, if you can, we can draw a trend line from those highs. You know, in 2008, we connect it with the highs in 2014, and that also, you know, it's going to be a bit of a grinder, but that will be where it takes us. And also, I think we can draw a bit of a line from here. I haven't drawn it very well. But if we connect that line there and those lows, so they're all, so this becomes really crucial. So excuse my messy charts, lovely viewers.
No, that's a great picture. So you have lots of confidence.
That's what I'm looking at, the 38.2. And then, you know, 38.2 retracement, we haven't really retrace, you know, we haven't really reversed this big downtrend until
so you could call this, I know a lot of people are talking about the death knell of the dollar. Dollar bulls could call this, you know, if you look at your monthly,
a retracement.
that it's just a bear market rally, a normal retracement. It's not the end of the dollar, and that may set up a great dollar buying euro shorting opportunity for maybe now that the under parity euro people have given up, and we have another few months and higher numbers, so really you won't be able to find a euro bear anywhere, just like you couldn't find a euro bull coming into the new year. Then maybe we go under parity, Nick.
Oh, you know what? Like, I'm totally open, of course. Yeah, like really. You know, yeah, of course we could. When we look at this, you know, from this, we could easily go lower and back to these lows. Why not? You know, I'm totally open to what happens here. Easily see another leg higher, lower. Sorry, it wouldn't look weird at all. Not at all.
So you want to delve into a little crypto stuff? Or is this a break for you to be away from crypto stuff?
No. I don't mind talking about crypto at all. So everybody's looking at Bitcoin. I really do think we're close to an interim high here. I had 144 as a really big level, and that's where we bounced off 2 days ago really sharply. We lost 10% off it the first time. I've got big fibs that I've drawn, you know, fib projections, because we're obviously at new all-time highs in these, and they've been working really well. So, and these red lines I've got from here have worked really well. So, but you know, it's crypto, and it very often spikes through, gets everybody long and wrong, and then comes back. And so I'm going to watch the daily close in crypto, and all those people who say, oh, daily close, yeah, it's open 24/7, there's no daily close. Trust me, there's a daily close, and it's in between the US end of the US session, before the start of the Asian session. And if we don't close above 44.40, then I still think we're in correction mode, and we're seeing one of those kind of irregular flat corrections that Gregor knows all about. So
Okay, let me ask you this: has the nature of the trading, either volume or spreads, changed since the hard fork, which I still don't know what it means? I know that there, they divided it up where people could get cash.
They've been doing some stuff, and the SegWit, it's all at the moment. Bitcoin has been really limited by transaction speed, and because they limit the block sizes to a megabyte, and so they found ways to divide that and make the transactions quicker. And to be honest, it's the savior of Bitcoin, and this is why Bitcoin will go higher. Yeah, it's working really well. I think what we're seeing is the signs are that it's working really well. Yeah, so don't be fooled by the bad press, guys. Really.
Yeah. The only hard fork, is something that happened to me when I was on a country road, but interesting.
The only hard fork is the one I stick in my dinner.
Yeah, that too. I tweeted about that. So, and with what's happening here, Nick, what else is really on your radar screen that you're focused on? And
some of these other alternative coins, like are doing really nicely. I'm really focused. Everybody's focused on whether Ethereum is going to go higher or lower from here, and so I'm watching that pretty closely. I've been trading one called Dash today. That's doing pretty nicely, and some of the very new coins have been doing pretty nicely. But yeah, no, I'm on my radar is an oil short. I'm quite short of oil, and I'm waiting to buy the dip in silver.
Okay. Great presentation.
I've left like 5 minutes for Blake. I'm really sorry, Blake.
Oh no, you left more than that. The interview's in about 40 minutes, so
okay,
time.
Great.
Yeah, we have time. So,
I can answer a question if anybody wants.
Yeah, okay. Let's see, I think we got...
Otherwise, I should hand it to Blake, really.
Well, this isn't a question, but Craig thinks you're a lovely butterfly.
Oh, thanks, Craig.
And then John wants your look on Euro-Swiss.
Euro-Swiss, yeah.
And I have to say hi to Brooke Tefera. Thanks for stalking, following me around everywhere, Brooke. Nice to see your handle in here. Hi, Jess.
This Euro-Swiss has been quite something, hasn't it? This correction, I definitely think we should... I wonder where I've hidden it. Hold on. I want to find it because I want to find the charts with my writing on. So I definitely think that this Euro-Swiss has got more upside room. I'm a buyer of the dips, and here we go. I think I should have it here. No, hold on 1 second.
Nice breakout.
My apologies. Where is it? Euro Swiss franc. Hurrah! Okay, here we go.
Hi, Nick, by the way. Hi, Dale.
Hello, Blake.
Hi, Blake. How are you, buddy?
Good. I was going to be here. I was here earlier, and I was listening to everything, and then my herd of animals decided they all wanted to pee. So I had to set down the mic for a minute, because it's so early here. The whole everybody else is sleeping. So anyway, continue on. I just want to let you guys know.
So
our life is like a farmer, like up before sunrise, asleep after sundown, except that we nurture seeds of greed for the harvest of pips.
Do you have that written down somewhere?
Yeah, my memory.
That's awesome.
Okay, so Euro-Swiss. Okay, so in my life, before there were harmonics and fibs, there were moving averages, and I still really like moving averages. Okay, and here is a weekly Euro-Swiss with a 200 moving average on it, does the Euro Swiss like this 200 moving average, we should say? And the answer is, and let's zoom back, yeah, it really does. It really does. Pay attention to it. It comes back, retests it, finds support, gets below it, retests it perfectly. So here we are. And finally, after all this time, the Euro Swiss has broken above this weekly 200 moving average. And I think we're going to come back and retest it and retest these prior highs from 2016 January around 111.99, 112, there or
Write
thereabouts.
that number down, everyone.
So 1.12, I think we're going to find support here, and I'm a buyer there with bells on. I've got an alarm set there, and so if we go to a daily and we do a little ABC dance here, so we measure this swing lower,
Nice.
so we measure from this high to this low, and we put it there, then it's bang on 112, exactly. That's so an ABC correction back to 112, which is the January 2016 highs, and the weekly 200 moving average is where I'm buying Euro Swiss. And you're welcome to join me. Okay.
Great look. Yeah.
Okay.
I am too.
Okay, cool.
And you're welcome to join me. I love it.
And I think, you know what, the biggest for me, and I'm not a conspiracy theory person really, and listen here, I'm just scratching my head. I'm not wearing a tinfoil hat, but I swear that the movements in the euro are the Swiss National Bank. They're taking profits on their longs, and when they're finished, they're going to buy it again. And this is why the euro is going down against everything.
I don't think that's a conspiracy theorist.
No, it's really true. Look at the size of their book.
Yeah,
like, it's massive.
And
so
they've
this. Right.
I was gonna say, Nick, but here's another thing is they hold a massive amount of U.S. securities, don't they?
Massive. Oh, they buy U.S. stocks. Yeah, they do.
Yeah.
Them and the Bank of Japan are who everybody who owns stocks should thank for their gains.
Yeah.
So,
right.
So anyway, so I agree with everything you said earlier, Dale, about the euro pound, and I think it's a really good guide for the pound. But this puppy is a really good guide for the euro Swiss.
You know, Steve Volge was.
If you don't trade it, it's still is the euro going to go up or down? The euro Swiss will tell you.
You know, there's some great mentoring besides some great views. So if you're not a trader, it's going to give you biases of when you should be looking to be long euro or short euro. Thank you for that. That's a pearl.
Very welcome. So now I'm going to sit back and enjoy Blake.
All right. Well, thanks.
Here he comes.
Hey, you know what?
Here comes that.
And
the cleanup hitter. The cleanup hitter right here, Blake Morrow.
Well, tidy up my mess.
Hey, no, it's always great to hear your views, and I'm for the first time and ever, I'm actually interested in Bitcoin thanks to you or cryptocurrencies. I'm not going to look at the chart right now. We got some data coming out here in a moment, but it's really getting mass appeal, and I'm very much a late adopter when it comes to this. And I'm not a buyer right now. I'm going to wait for the next lull because there will be a lull. It's
for sure there will be. There will. Yeah. I think there is. We're almost complete in this wave up, and then you know what? We should see a correction of a third. A third back, and it will take a third of the time that we take it to rally. So when you think from the start of the year, we've gone from what, 750, 800 to 4,400. We're going to retrace a third of that, so that's going to be approximately 1,000. So if we're at 4,400 now, we're going to come back to 3,400, maybe 3,000. That's going to be such a great buy when it does. But everybody else who wrote it down is going to be going, oh my God, the world is ending. And we'll be ready to buy. So
and the thing is I'm starting to accept the fact it is a means of transaction that's going to be the future. It's picking the right ones. I think is going to be, that's a whole other discussion, and we can actually save that for. I think that should be a special that we do here on the Face webinar.
It should be because I think we have that requires a bit of research. People say, oh, this is like the tech boom, and people were bringing out stuff that couldn't do anything, and it was just an idea, and people were buying it, and that was true in the tech boom. But the tech boom gave us Google and Amazon and Microsoft. So
right there.
There are definitely diamonds in the rough, and it's got to figure out which ones they are, because I've been doing a lot of research, and it's more of the chains that are specific to certain industries, and anyway, again, for a different,
maybe it's the ones that come out of the dust, but I mean, first we have to get through the parabolic stage and the blow-off stage, right, Nick? And you know, we're almost like that now. I mean, it's pretty parabolic, but you know, most parabolas end up crashing.
It's not that easy to trade break. It's these platforms, they're like the worst, dodgiest retail platform you've ever tried.
Well, you know,
the market moves fast, it freezes.
I remember.
It's quite hilarious.
You know.
And by the way, the data seems a little bit better than expected. We're getting a pretty good dollar response right now. But you know, I want to say that the very first platform I traded stocks on, and now I can't even think of the name of it, but Nick, it was 1995, and it was horrendous. I mean, you know, trading through an Ethernet or a phone cord. Oh my God, it was ridiculous. So I feel fine. I feel we'll be going back into those days.
Did you have a ticker tape under glass that you
No, I'm not as old as you, Dale.
Tell me I'm not a great straight.
I remember Quotrons. I had a Quotron that I shared with 3 other guys, but that's a different story. Anyway, hey, just really quick, Nick, before you go, by the way, the U.S. data is not really moving the market all that much. You were talking about the euro pound, and you discussed it at pretty great length. You know, I've been watching this ascending wedge, and I was short overnight. I shorted again this morning. I closed it out, made some money because I was short from a good price overnight.
Well done.
Thank you. I'm actually looking to add to the euro pound on a break below. And you said, it's interesting. You said 90.62.
Yeah.
And I'm looking at 90. Basically, what is the spike low? The spike low was 90. What is it? 90.62. So we just So we basically just need to hit new lows.
Yeah. Exactly. Yeah.
Yeah, we hit new lows, and I'm going to get kind of aggressive here.
Yeah, no.
What's it? Yeah, right. Well, you might be on the other side, right? That might happen.
I'll cover my long there.
Right, exactly, because that's what a lot of people. It's so interesting. Like if I'm in a position like right now, I may cover some down here at 90.50, but as everybody's shorting, I'm usually the one trying to cover up some of mine that I've already taken, you know, an early position on. So and that's why a lot of breakouts fail in the summer, especially in the summertime when you have lack of liquidity. Just because everybody knows it's like, okay, I'm gonna, you know, breakouts are meant to be faded, and especially in illiquid periods. But I actually I think from a macro standpoint, and I know Stelios will probably jump in at some point about this, I do believe that the pound's due for a bounce. Hey, you know what, Nick? Since you're in the UK, I read something yesterday about one of the oh shoot, you know what? It's right here. This article is good. Vince Cable says there's a significant possibility it still won't happen. And
Vince Cable is the Liberal Democrats who lost, and you know, a huge like Remainer, and they have no power whatsoever. He might be right. You know, it is going to happen. It's going to be delayed. But you know what? They might delay it so long, everybody gets pissed off, and then they have another referendum, and people say, yeah, screw it. And, you know, maybe, but none of that is good for the pound, let me tell you. That would be awful, and not what people voted for. So let's see.
Oh, there you go.
So
I mean, I'm not like, there's nothing wrong with Vince Cable, but just, yeah.
Okay,
so at least he's named after the currency.
So let me ask you this, Nick. Let's say it delays and it starts to get. At some point, shorts in the cable and not Vince Cable. The shorts in the pound going to start to get a little nervous, don't you think?
I think that do you think that the pound short boat is very full?
I still
I'm
think
not sure that it is, and I do think there's no doubt about it. We've got a rocky road ahead in the pound with regard to Brexit. But what we also have in the UK is inflation. We really have inflation.
And that was Stelios's argument, is you got inflation. So what's the Bank of England going to do? What can
they
they
are
do?
going to ignore the inflation. They're going to look through it.
Oh,
But the market will still see it, and I still think they'll buy the pound on it.
Really? That's interesting.
Yeah.
And what Stelios might be yammering to jump in the conversation. Here he is. Okay, I got to hear this.
No, but I just wanted to say the Bank of England is very well known for being slow. When inflation was undershooting, they didn't.
Yeah.
And late. Yeah, late is another word for it. Yeah, but when inflation was low, was undershooting. They weren't doing anything. When it was stubbornly high, remember 4% plus something.
5% we got
5%. Yeah. Again, they weren't doing anything. So they are slow, or they take their time. But the thing that is slowly changing, in my opinion, is that wage growth and inflation, the gap is tightening slowly. You saw the prints yesterday or the day before. It's slowly tightening, and that has been the main reason, or one of the main reasons, why they haven't touched rate, they haven't hiked. And they've said it, that look, the wage growth does not keep up with inflation. Well, this is slowly turning. So if this continues a little bit more,
so as soon as we're actually closing the gap and able to live nicely again, they're gonna hike.
Well,
right?
yeah, it's a good question. But the thing I always ask myself is, if we were at 2 or 3% base rates, this is a very valid argument. We're at 0.25. These are supposed to be extraordinary measures. It's not supposed to be there for 7-8 years. That's the problem. What they're doing, in my opinion. So I think they're just. I think, apart from Carney, who is a very well-known dove, I think the rest are itching to reverse at least the rate cut from last August and just start normalizing a little bit. The Fed has started. Other central banks now have to take the baton and slowly, try to do the same. I'm not saying they're going to take rates to 3%, but a quarter, a half, take it to 1% maybe. I don't think it's going to damage anything. It's not going to make such a huge difference. I don't think, but.
I would agree with you. I think if they're going to do it, the Bank of England will look down and say, you know what, later down the road, these Brexit negotiations might get hairy. Maybe we should do it sooner rather than later. So maybe we are setting up a surprise in the pound.
Yeah, and going back to the and going back to what you said about the potential delays in the negotiations and all that, that could actually be a positive for exactly that reason. That they might say, look, we've got a couple of years ahead of us.
Time, yeah.
Yeah, let's try and get in now.
If they take it off, they can put it back on again, can't they?
Of course. Yeah. They can cut and they can do QE at a moment's notice. It's the easiest thing for them. They've shown it. So
right. So if they have to wrangle in any type of a spike up in inflation, they can do it, and it's an act.
Yeah. Yes.
Interesting.
So,
yeah. I know, Stelios, you're from a macro standpoint, you're really bullish the pound here. Technically, other than today that we're sitting at a 618 retracement and we've been holding it, despite the move down in the euro dollar. I'm still a little nervous technically on being bullish the cable. The fact of the matter that we pushed above this channel resistance and got everybody long up here. We pushed past the 38% retracement at that point, got a lot of longs, squeezed out a lot of shorts there, and it took us right back down to the 618. That in my opinion was very bearish. And it was very bearish over the course of the last couple of weeks. Now that we're back down at the 618, I just don't really know what to do with it. It's like kind of mid-range and in no man's land. So, and that's speaking from somebody myself being long the pound through the euro pound right now. I'm still a little. I don't feel very comfortable. It's not like I do enjoy being in a trade where I'm like, okay, I'm long the pound and I know it looks good across the board. I mean, it doesn't. I mean, you look at all these pound crosses. I mean, the pound Aussie got smashed the last couple of days. Pound New Zealand also came under pressure. Pound Canadian, you know, hit new trend lows. I mean, the pound really doesn't look good technically. And so, but then again, we're in summer, and breakouts are often faded. So that, you know, then you got that for you. So, I mean, look, how many people went long the euro overnight based on the dovish FOMC yesterday? Can you imagine how many traders were long the euro dollar overnight going into
Vince Cable bought it.
Yeah.
And I'll tell you what, I'm very interested in the guy's name because I'm changing my name to Dale Dollar. So
I like that. Yeah, that's it.
Yeah, you like that?
That's good.
Vince Cable, Dale Dollar. Okay.
Dale Dollar. And we're
I'm gonna be lucky Nicola.
I'm gonna be Bitcoin Blake. Oh, Nick. Yeah. Oh, look out. No, but here's the thing. Let's talk a little bit about the euro dollar really quick.
Blake. No,
I Beaver Blake. Why would I?
Isn't that what they call a Canadian? No, okay, never mind.
You got me. You got me. You live in Canada. You live in Canada. I only visit. Hey, one of the other things though is we looked at the euro dollar. I am not overly bearish the euro. I've been, you know, telling everybody on this daily webinar for the last couple of weeks. I'm expecting to move lower in the euro, but very limited. I was thinking we might get to like 116. And any move down to 116 is probably going to find some buyers. It's the dollar strength that we're seeing, I think, is very limited in scope to the upside. And I know you guys have been too. We've been really bearish the dollar since the beginning of the year, since Donald Trump was inaugurated. And you know, I've been shorting the dollar every chance that I get. I have been playing the dollar to the long side again, you know, over the last couple of weeks, and it's not comfortable. It's just not. It's not an easy trade being long the dollar. I mean, I don't know how if you've been trading it, Nick, much. I know you've been really focused on cryptocurrencies recently, but man, I'll tell you, one of the toughest trades out there is being long the dollar. It has been. So anyway, so right now the euro, like if we push down to 116, that's the place that I'll personally be looking to pick up some euros. Now, Stelios, are you still here?
Of course I am. Where would I go, man?
Yeah, true. I got a question for you, and maybe you might be able to answer this, because this is the problem that I've had being on the long side of the dollar the last couple of weeks, and you've people that listen to the week ahead video, you've heard me say this. If you listen to these daily webinars every day, I don't know if every day I say this, but I have said it on a few different occasions. I have a hard time wrapping my head around what makes sense to be long the dollar right now. Like, I don't have a macro argument. I don't have and when I trade, I like to have some sort of argument. And the only one that I have about the dollar index is it's near support and it's oversold, which is a technical argument, which is not a good argument for me. Even though I am a technician, I can't trade. I have a difficult time trading just on technicals alone. I need a macro backdrop to be long or short some sort of currency, and right now I have a hard time getting my head around it. I mean, is there anything that you see from a macro standpoint, Stelios, that would suggest that, hey, the dollar is a good long right now?
Well, personally, I have not been long the dollar at all. I've been long silver, which is effectively short the dollar.
Right.
But the only thing that I can think about that somebody might say, yeah, I'm going to be long the dollar for this reason, is that the market is pricing, Fed Fund futures are pricing just over one hike by the end of next year. So the question is, how much less can the market price? What's the risk? Is it the risk that the market price cuts or it prices zero hikes? or is it the risk that we get a couple of strong numbers somewhere and suddenly we price 2 or 3? So I think that's the only reason why anybody, or that's my opinion, that I would switch to going long the dollar. If we go even less, if we go to price less than one more hike by the end of next year, I think then risk reward might be good for a long dollar trade. But having said that, I don't see what's going to change data-wise so that we do price in more hikes. Data has been quite disappointing lately, and okay, we had payrolls, which was a good headline number, but overall, it's not. The U.S. economy is not expanding. It's not really, improving quarter on quarter. I mean, we have GDP growth positive, obviously, but it's it's kind of seems to be still stalling a little bit.
And
I can think of one event, Blake, one fundamental event that no wonder no one possibly even considers it anymore, would be a risk-off climate. That people may go to the dollar. I'm not saying, it could go the other way, but it's going to be interesting. If people go the bonds, I think you need to buy U.S. dollars to buy U.S. treasuries.
Okay, so here's my argument to that argument. And first of all, I was the king of risk off buy dollars for many years, because any type of risk off, I was very long dollars. We're in a different situation nowadays, and the risk off, or whatever you could call the little blips that we've seen in this very bullish market, have been any type of risk off has been mostly related to geopolitical risks, and the geopolitical risks are spurred by the U.S. administration predominantly. I mean, you could say, well, that's North Korea making all these things. Yeah, but our response to that is we're gonna drop a nuke on you if you don't shut up. So that has spurred dollar weakness. So I think it has to. You have to understand why we're having risk off. If we have risk off because there's military action in Venezuela or military action in Korea, I don't know if the dollar is going to be looked at as a safe haven. If the market implodes because of another European debt crisis flaring up, and then there's a liquidity issue, then it might come back to the dollar being bid. So I think it's not as, I don't think it's as black and white, because it was more black and white several years ago when right, Stelios, when Greece had we had the European debt crisis, and then you had it was a funding crisis, just like very similar to the financial crisis that we had a couple years before that. So 10 years ago.
So this could be, this dollar thing, Blake, could be a confidence crisis because of what you're talking about, the lack of confidence in what's happening politically in the U.S.
Right.
People want to be in dollars because they look at it from overseas and go, it's chaotic. His own party's leaving him.
Yeah, and
understand it. Okay, I get it.
One of the big things that would scare the crap out of me as an American, and because for those of you that don't know, Stelios is in Athens, Greece. Nick is in the UK. Grega, who couldn't be here today, he's in
Slovenia.
I almost said Croatia. He's in Slovenia. And because those are the exact same countries, obviously. I'm being sarcastic. That's a stupid American thing to say. But
the ugly Americans.
Yeah, right, exactly. Yeah, but as an American, one of the things that would scare me quite a bit would be if we saw a pure sale of anything that's U.S. related, whether if bonds go down and yields go up, okay, but the dollar goes down and stocks go down, at that point in time, I'm going to start buying ammunition or guns or something. Maybe build a bomb shelter here in my backyard. That's the thing that scares me the most, is if we see bonds go down and yields go up as a result, and if the dollar doesn't have a positive response to that, I will be genuinely concerned about owning U.S. assets, generally speaking. So, you know, whether it's stocks or dollars or anything.
Great big picture stuff, partner.
Well, you know, it's just that those are the things that I think about that keep me up at night. Maybe it was the reason why I only slept a few hours last night. No, that wasn't really the reason why. But anyway, but here's the dollar technically, and I do believe that we're at a ton of support. This is what is very challenging for both longs and shorts. I mean, people that are short the dollar, they are expecting, you know, us to break through the support and the dollar really start a huge, bigger leg lower, and I get it, but at the same time, we are very oversold technically, which is making it the easy money on the short side of the market has been made since the beginning of the year for the dollar. This is not easy. Down here is very challenging, and we're at such a huge inflection point for the dollar. I think the next move is either a slight recovery or the dollar gets completely destroyed. And I don't know, right now, I'm just trying to play a little bit of a dollar recovery. Well, I was just long the dollar this morning, and I'm not long anymore. But that's what I do, is I just stay long the dollar intraday. But being long the dollar for more than a day or two has been very difficult, because at any point we can slam through these lows. And now and just so you know, technically, if this bear flag plays out, you guys can see the repercussions of what it looks like if it does play out. You know, we're talking a move to 90, but a move to 90 would kickstart a much bigger move lower. And if I was an Elliott wave guy, we'd be looking at would we be in wave 3, right? I don't know. You guys are the better Elliotticians than I am, but you're talking, you know, very, very big move through all that support. Now, a couple other things that I wanted to talk about, and what time, and your guest is coming on in just a few minutes, Dale.
Yes, Blake.
Okay. Oh, he stepped away. Okay. So just a couple of other things that I want to cover really, really fast. The dollar Canadian, I played this to the long side yesterday, and I took a loss on it. I was trying to play a cup and handle pattern. Came through, as soon as it came through this trend line support, I pulled the trade off the table, and I took a loss in this. The dollar Canadian is one of those currencies that I'm very surprised that it has not recovered, even with the sell-off that we've seen in crude. Because if you look at crude oil, and I will go on to say that the dynamics between crude and the Canadian have really broken quite a bit over the last year or so, but crude showed such a decisive move lower from the 618 retracement. And by the way, that was a 618 retracement, if you don't know, from the highs around 55. We hit the 618 retracement. We had a decisive move lower, and crude's been falling. We're closing in on the 50% retracement right now. As crude's been falling, we have not seen Canadian weakness, which I've been very, very, very surprised that the dollar Canadian isn't trading back at 127 or higher. But one of the currencies that could actually be more responsive than the Canadian would be, the Norwegian krona. If you look at the NOK or the krona or the crown, however you want to call it, you know, we're creeping right back up towards resistance around that 801 level. And if the dollar does get you know, some bullishness, meaning the euro dollar drops towards 116, if that does happen, I think the US dollar Norwegian krona is still primed for a move higher. And I've played this to the long side many a times over the last couple of weeks. I had blogged about it on FX Street, you know, because right when it hit the 261% extension, close to the 161% extension, respected this channel, or this trend line here, I played it to the long side at 790. I've been buying it at 790, selling it at the, you know, at 795, buying it again at 791, selling it again at 790, you know, 97. I've traded it long multiple times. I did not buy it yesterday, though. I was a little nervous about the dollar, just like I'm sure a lot of people were short the dollar. I was just a little nervous about the dollar yesterday. I didn't play to the long side last night, unfortunately, but I will still say that if the dollar does recover, it can recover against the Norwegian krona. I mean, we could probably see a move back up towards 8.15 from 8 or just sub 8 where we're at right now. I still think that that's a very viable trade, and that's one that personally I wouldn't mind doing, because if you know that crude oil is so weak, and one of the currencies that would be affected most would be the Norwegian krona, and if the dollar does get a little bit of a lift, then I think this is a natural one to play back to the upside, and that's one that really I'm most in tune with right now, or most that I'm paying attention to as far as dollar longs go, because I don't know where else to play dollar longs. You know, I think one of the toughest currencies to trade right now has been the Aussie, and which I'm not in it, but the Aussie broke below the 78.40. This is the breakout point, right? We broke back below that breakout point. We didn't get any follow through. I thought, you know, yesterday morning we were going to wake up and it was going to be trading down at 77.50. Not happening, and the dollar weakness, it took it right back up again. So anybody who got short got squeezed. Then if you got long overnight and you bought it because, you know, the dollar was so weak, I mean, you got turned upside down again. So I think that the Aussie dollar is a very challenging currency to trade right now. I feel very fortunate that I have not tried to play momentum either to the downside or to the upside in the Aussie. Thank God I didn't, but I'm sure that some of you have, and I'm sure a lot of the market and a lot of market participants are extremely frustrated with what they've seen in the Aussie. So I don't really want to look there. The Kiwi's been trading pretty heavy. I mean, that had a false breakout, head and shoulder pattern, but it's been, you know, due to the dollar weakness, it's been holding up. But I think the Kiwi could be a potential short candidate. And probably one of the better ones that I've seen out there is the dollar Swiss, that still has a nice inverted head and shoulder pattern. We're now building some very nice symmetry, which could still, you know, play out to the upside. So that would be one that I wouldn't mind. I don't think I wouldn't mind, you know, playing that to the long side if the dollar does get a boost as well. So Dale, yes. I'm going to be passing it back over to you here in a second. I know you're going to be bringing on your guest.
We have a few minutes, Blake. We have about 3 minutes.
Oh, okay, we do. And Stelios, I want to say thank you for being here today. For all the investing.com viewers that are in attendance today, thanks for listening in. Remember, we do broadcast each and every morning, and we start at 9 a.m. Eastern? No, 8 a.m. Eastern. 8 a.m. Eastern every day.
Our life is like a farmer, up before sunrise.
Yes. Well, for those of us on the West Coast, that's correct. But you know, we always have interviews every day. Well, most every day. Dale's very our hostess with the mostest, who brings in some great guests every day at 9 a.m. Eastern, or 90% of the days. So if this is your first time here to this webinar, make sure you have your registration signed up with your correct email through Citrix. They'll send you a reminder every day. And like I said, Dale brings in phenomenal guests, and all walks of life. We get analysts, we get traders, we get independent traders, fund managers, trading psychologists, every facet of the business. And remember, it's free. It's a community experience. That's why we call it the FACE webinars. So make sure you do that. And I want to thank Nick for being here today. Nick. Yeah, Nick is and Dale, one of the things that we should set up, and I know Nick, I don't know if she's on right now, but one of the things that we should set up as a group is, I think we need to set up a webinar for cryptocurrency specialized, and you know, maybe set that up for the end of this month, or maybe the beginning of next month, where we have a full hour of talking cryptocurrencies, and what the different ones are, and what are the ups and downs and benefits and drawbacks. I think that'd be very educational for the community. I know myself, I will do a lot of research ahead of that, but I really would love to hear insights from other people. And maybe if you have a cryptocurrency, another cryptocurrency expert that you could bring in,
Okay.
you know, that would be even better. We can make it a crypto webinar.
Okay.
Yeah.
Thank you, Blake.
And like I said, I've been very apprehensive about Bitcoin over the years, but I think at some point you got to face the facts that it looks like it is here to stay, and there's it is going to be. I think it is you have to be very selective, and I think that's going to be educational for all of us.
All right, buddy.
All right, thank you, Stelios, thank you, Nick, and Dale, thank you for hosting as always. I'm going to flip it over to you, and you have a great interview with your guest.
Thank you, Blake. Thank you, Nick. Thank you, Stelios. And as Blake has said, I put time in to find interesting people that can edify the community, and believe I've done it again. And I'm about to pass the baton to Ernie Baratimos. Ernie, waiting for your screen to pop up and hear your voice. Great to meet you. Great to meet you, Ernie. Thank you so much for taking time out to be with us today.
All right, I'm going to switch over to a different.
Different screen.
I'm all set. You know, I'm on vacation, and I brought all my some of my computers over to the vacation house.
Okay.
So I don't have my normal setup. So it's not like just push the button and go.
All right. Are you going to share your screen and talk about things that you see, or you just want to talk about? There we go. All right. So yeah. Ernie, I read a little bit about you. I've been to your website, and I always like to start off, and I know your background. You said in your bio that you had about 20 years where you had, some decent years, some off years. So, I mean, you really persisted in this business. I'm interested in how you were introduced to trading, what influenced you, and all the different, the long and winding road you took for 20 years before you found a mentor that helped you with a breakthrough.
Sure. Yeah. Well, my career spans back a ways. I've got about 35 years as a, I guess, professional. I started out my career a long time ago, back in the late 70s, early 80s, working for Raytheon Research, designing laser-based inertial guidance systems for intercontinental ballistic missiles. So I guess that would have made me what you call a rocket scientist back then.
Right, and they say trading isn't rocket science, is it?
Well, I like to say that trading is the hardest profession in the world to make easy money.
Oh yeah, that reminds me of when I went to the floor in Chicago, a veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck." So yeah, same philosophy.
It's finding your own way that's the journey,
Right.
In the beginning, I tried everything that everybody else was doing and had up and down success, but in the aggregate, it was usually down, trying to do what everybody else is doing. And so, I guess you could take that sort of pearl of wisdom from the books by what's his name? Jack Schwager. Yeah, Jack Schwager in his Market Wizard books. And one of the things that really stood out to me, all these successful traders that he interviewed, none of them are doing things the same way, and they're certainly not doing things the way the conventional wisdom says to do them. And
Jack also reaffirms what you're talking about. I asked him, I've interviewed him, I don't know, 3 times now, and I said, what's the most important advice you could give to someone who's trading? And his answer was, find a trading style that fits your personality.
Well, that's exactly right. But there are certain universals that I think anybody can adopt that will certainly help them along the way. But the most important thing is to, first of all, find an edge and know what your edge is, and then exercise good money management. but you know, that's kind of like tacit. I mean, everybody knows that. It's finding that edge, and then it's finding, you know, your own way, the thing that excites you, the thing that, you know, brings out the visceral reaction in you, and the thing that keeps you motivated. And you know, that's what it was for me, anyways. It's amazing that I stuck with it as long as I did, because I certainly paid my dues. I've literally lost hundreds and hundreds of thousands of dollars in my trading education, and most of that time it was because I was on my own, and it wasn't until I found mentors that helped sort of direct me.
Who were they?
Well, one I will mention by name. The other, I don't know if he'll want me to mention by name.
Okay, that's fine.
Yeah, the one that I won't mention by name, he was a very successful fund manager, traded mostly treasuries in his career, and made tens of millions, if not $100 million in his career. And what I learned from him was the reverence for money, and that really we're not in here to make money as much as we are to preserve our capital and then wait for opportunities. That it's kind of like, you know, waiting for money to be found on the ground and all you have to do is pick it up. You know, trading often is
Therefore, less is more, right, Ernie?
Absolutely.
You know, and you know, that's one of the hardest things. I used to play Tom Petty's song, "The waiting is the hardest part."
Yeah. Well, I'll give you an example. You know, one of my favorite trades is the knob trade, and that's notes over bonds. And that's a yield curve trade where you're waiting for either a yield curve that is steepening or a yield curve that is flattening. And I don't know if you want me to go into any of the specifics about that, but essentially, you know, when the yield curve is steepening, your predominant trade is a long trade, or long notes over bonds, long the 10-year, short the 30-year. And that's a trade that has, you know, everybody seems to have a different variation of it. I take a very aggressive version of that trade, and it's been working for decades and decades. And then all of a sudden, over the past 6 months, it hasn't been working. And you know, it probably takes about 2 months before you sort of give up and decide that it's not working. But the best thing for me to do is just to leave it alone and just watch it and wait for it until there are, you know, that money on the ground that I can pick up again. Right now, it's dead money.
So it was your money that was falling on the ground the last 2 months. So how do you know? And do you have a parameter of when you're going to pull the plug on something that's not working? You know, when I raise money for money managers, to me, Ernie, you know, most people look at the performance, how well they're doing, who has the highest year-to-date returns. You know what I looked at?
What's that?
Their maximum drawdown.
Yeah, well,
that to me was more important, because everyone has drawdowns. All the greats do. You know, Paul Tudor Jones, Rich Dennis. You know, I mean, everyone has a drawdown. You probably even Ernie Veritimos has one once in a while. So to me, it's how you manage yourself on a drawdown, and if you have the discipline to know how to lose. Yeah,
and that's very dependent upon the actual trade that you're in too. But as a general rule, things that I'm trading systematically, I'm looking at my net profit as a percent of the drawdown, and my risk as a percent of the drawdown. So those are probably my most important.
So did you code your own algos for your system? I mean, you had the background to do it. I believe now it's not as discretionary as it probably was the first 20 years. Are you more on autopilot with what you've developed for trading ideas?
Yeah, can I tell how I sort of got into all of this?
Yeah, you know, sure, Ernie, this is America still.
Well, I just don't want to jump ahead and everything, so I just a little bit of background.
Okay.
You know, like I said, I've been in technology most of my life, but technology as it applied to finance. And so many years ago, I worked for a lot of the big financial companies, like, a lot of the big investment banks and others like, Fidelity and others, and Bloomberg and Credit Suisse, and you name it. And I found myself being recruited by Sun Microsystems as their chief architect for professional services. And so during that tenure, most of my big clients were on Wall Street. And in fact, during the late 90s and early 2000s, we were responsible for building out most of the systems on Wall Street, including the exchanges and all the big investment banks and their systems. And so that's where I developed this affinity for finance. Of course, I'm coming from a technical background.
Right.
And but it wasn't until after I left Sun, which was after the dot-com bubble burst, and my stock options went from on paper being worth millions and millions to me, if I wanted to exercise them, having to owe them money. I decided to go out on my own and did a bunch of consulting, international consulting, helping companies meet their business goals and match it up with their technology, and did it mostly in the areas of finance and insurance.
I really don't want to skip over what just that experience that you had. So, a lot of people, when things aren't going well, and, I'm sure even though it was on paper, you had no idea it could end up disappearing like that. And when people go through an event like that, some people will get into a fetal position and just keep dwelling on it and dwelling on it. And I'm interested in how you recovered psychologically from something like that and how you reacted to it. Did you take a hiatus, or did it make you more aggressive that, just like a lot of people that got caught long by financial planners in 2000 and 2008 and said, if I'm going to lose my money, I'm going to do it myself. And they became self-directed. So what was your reaction to that, and how long did it take you to emotionally recover from that?
Yeah, it's something like that. There's sort of the short-term view, which is a little bit more reactionary and a little bit more egocentric. And then there's the long-term view, looking back and saying, geez, would I have been better off just sticking with it? But at the time, that's how I felt. I was literally within 1 month of vesting several $1 million. And,
wow.
and so that really kicked me in the gut. And I knew that if I went back to consulting, I could make a pretty good living, making a few $100 an hour. And
Right.
I had the connections with, CXOs from Fortune 5s to Fortune 100s, and so I could keep myself going. And
Right.
so that's what I decided to do. At the time, though, there were a lot of political risks that were involved that made that whole journey very difficult. That was the era where we started to take on H-1B visas and bring in a lot of, workers and talent from overseas,
Okay.
which severely diluted the market. And so what started out really good ended up being a real struggle, because my primary job then was resourcing and putting together teams overseas, and not necessarily, putting some of my best talents to work, and having to compete much more heavily on
with the people that you were bringing over.
Yeah, I'm bringing over basically people to train to take over my position that will eventually take those positions at a much lower cost.
Right. Yeah. Okay.
But that was the work, and that's what you had to do.
See, this is why, Ernie, I say you can't learn experience. It only comes with the passing of time and living through stuff. Man, you've lived through some stuff, Ernie. You know what? You're a warrior.
Well, that's the big thing, is just to keep on plugging and trying to find new things, and heading in directions or finding a direction to head in is important. But being so stubborn and following that path until its demise is futile. And in every path, eventually, no matter how good it is eventually going to wane or recede, and it may come back, but you don't know. The important thing is that you need to pivot at the right point and just keep on finding new paths that will lead you up. Now, whether that means making money or just gaining experience, I don't think it necessarily matters. I think what matters is that you enjoy what you're doing.
Amen.
You know?
So tell us how you're enjoying yourself now. Let's get out of the time machine and talk about what you have on your screen here. And
well, so one of my other mentors that kind of led me into this and into systematic stuff is Perry Kaufman, and I don't know if you've ever interviewed Perry before.
I haven't.
But Perry is largely considered, you know, like the godfather of systems trading, and he taught me a lot about, you know, what works and what doesn't. And so I helped him. I actually helped him edit his most recent book. And while we were working together, we were working on ideas for, you know, creating systems that could be approachable to retail traders. And that's, you know, of course, it was a little self-serving, but at the same time, I wanted to be able to share this with some people. And that's what I do now. I trade clients' money and my own money, and I also take on a few people every month to teach them the system that we do. And so almost everything that I do is automated. I follow one crucial principle in automation that seems to work. And I don't want to say it's the holy grail, but if there were a holy grail, this is probably the closest thing to it, unless you're doing some front-running arbitrage and high-frequency trading, which seems to be the holy grail. Unfortunately,
right.
You need, you know, tens of millions or hundreds of millions of dollars to enter into that game. And that is that trading multiple strategies, diverse strategies that are non-correlated. That is the holy grail. And so everything that I do is developing a system around developing strategies that are non-correlated and running as many of them as I possibly can.
Yeah, first time I've heard this, Ernie. It's
Really?
it's eye-opening. Okay, so the fact, yeah, because a lot of people most likely run correlated systems that have relative performance depending upon which system, but they're all pretty correlated to each other.
Sure.
So
well,
you went the other way.
Yeah, so I agree to, you know, and those are two very good ideas because there is efficacy in both. Now, I also do some correlated strategies, but those are always in the context of doing a statistical arbitrage. So you're looking for two correlated things, and you're playing the relationship between those two things. And having a close correlation is very important so that you can so that any kind of divergence in that relationship can be measured statistically, and you can take advantage of it by going along the underperforming and short the overperforming.
So you look for reversion on those strategies.
Exactly, and that's exactly what the knob trade is. And there are other trades that I trade like that, like the crack spread or the crush spread. The crack spread being an energy spread between oil and heating oil and gasoline, or heating oil and gasoline. All of those things are very highly correlated. Or the crush spread, which is the spread between soybeans and soy meal or soy oil. Another pair that has very high correlation. And I'm sure that there's many equities that have a high degree of correlation. I just find futures a much more vibrant and an easier and simpler way to trade that type of stuff. So I agree 100% that you know, a highly correlated pairs in that type of strategy is really important. But it's also a very difficult way to earn a living, only because every once in a while, like I was mentioning with the knob trade, the trade goes away. So what do you do then? You know, it's not like, you know, it's not like that high degree correlation strategy, that arbitrage strategy is there all the time like clockwork. Things like, well, what's happening today in the market, at least to my best guesstimation, the reason why the knob trade and a lot of other trades aren't working right now is the extremely low volatility.
Okay.
You know, volatility kicked up a little bit recently, but then receded again. And when it did, for a moment there, the knob trade came back for one trade, which was, you know, which is crazy. But
okay, so the suppression of volatility is affecting, you know, the knob spread. Is and probably not as much commodity-related spreads like the crush and the crack.
That's correct. Those are more dictated by other forces.
Right.
I wish I could name them all.
Mother Nature instead of Mother Yellen.
Yeah, exactly.
Okay.
So there's inherent volatility in those markets that make those more vibrant and more regular to trade, that are outside some of the normal forces that are happening in the market. But they have their issues too. I mean, you have to be kind of take a longer term view on those trades, and that's what I'm doing, because they have these huge wide swings.
What does AITR stand for, Ernie?
Well, originally that stood for Apple Investor Trading Room.
Okay.
And that's a whole story that I skipped over. It was a blog that I had for several years called the appleinvestor.com blog. It doesn't really exist anymore, but it was kind of seminal to my getting into automated trading, because I had lost a lot of money, and I started the blog as sort of a way of spiritual redemption and looking for answers and trying to gather other people's opinions.
Okay.
And so, for a long time.
Did that help you? Because, Ernie, personally, I'm a big believer in intelligence gathering and social trading. And, there's times I could wake up in the morning, I'm not automated, I'm pretty discretionary, and not have one idea. And we only have two eyes. And when you surround yourself by with traders that are better than you, just, the sharing of information like you were doing with that blog is a big edge for me.
Well, Dale, that's how I found my mentors.
Okay. Right. So, and you know what? That's how people find them here too. And how I found in working with a team, that have different methodologies, and when they're all looking at perhaps the same type of outcome coming from different styles, it's to me like a confluence. Do you get confluences with your automated trading where, or it's just like, it's go. When it's green, when it's red, or are there ever situations where you can see several different things lining up on your automatic trading and your algos?
Well, I wish it was that easy.
Okay. All right.
And see, that's the thing. When people take on automated trading, it seems like everyone's looking for the rock star strategy, right? And they're going to figure out how to build it, or find somebody else that's doing it and then recreate it or re-engineer it or whatever. And
how about just plagiarize it?
Yeah, well, and there's really nothing wrong with that belief. That may sound a little weird, but if you take a lesson from someone like Steve Jobs, perhaps the greatest entrepreneur and pseudo-technologist or marketer ever to come about, he felt that the reason for their success was to be able to steal ideas and then make them their own. The Macintosh itself was an idea stolen from Xerox PARC.
It sounds like Zuckerberg too.
Sure. I mean, there is nothing wrong with that, as long as
Bill Gates. So a lot of these guys, right? I mean, they weren't original thinkers, but they were strategic thinkers, and they saw the potential of something that others didn't.
Yeah. So I think that there's absolutely nothing wrong with stealing ideas and then making them your own. That's how we all
like it. I don't like it.
So the problem now is that people getting into automated trading, they're trying to find that cool rock star strategy. The problem is that there is no strategy out there that lasts forever, and being able to recreate somebody else's strategy, it can be fraught with peril, because you don't know all the machinations that they went through to get there. So you might.
And that's a great point. And markets are ever changing, so you have to always be. It's an ongoing process, probably for you with your auto trading, that you have to be tweaking it. Do you tweak it?
Well, see, that's the problem. Where's the amount of effort that you want to put in to get the greatest return? And is it in tweaking your rock star strategy and try to keep it going? while it's losing money and you're trying to figure out how to make it recover, or is there a better way? And I truly believe there is a much, much better way. And that is that you don't need to create a rock star strategy. As a matter of fact, it is a lot easier to create really simple, okay strategies. And you can come up with these, 1, 2, 3, 4 a week with no problem. And they may last for a little bit, for a while, who knows? And I don't really care. All I care is that they're okay performers and they were simple. The key, though, is what I said before, and that's this holy grail, that you can then take those really simple strategies and put them together. And here's the really cool part. When they have a low degree of correlation, what happens is when you combine their equity returns, the drawdowns tend to cancel one another out because they have, their returns are non-correlated, meaning that when one is going down, the other one might just as well be going up. Right. And so the drawdowns become diminished. And if all the strategies are generally profitable, no matter how profitable they are, their profits are additive. And so the effect is you can take a bunch of very squiggly equity curves and put them together, and they turn into this beautiful smooth equity curve that just goes straight up.
Well, you know what, Ernie, you're the first rocket scientist I've ever interviewed, and your journey was really interesting, and talking about, it's not all blue sky, and all the different things you went through. Jake Bernstein, I don't know if you remember him, used to call character quality that you have as stick-to-itiveness. I mean, you stick to it, you don't lose till you quit, and your persistence, and having to go through things as in your what was your original vocation, and see that change, adapting. And the adapting that you went through there, I think, gave you the training to adapt to changes in the markets. And really, I'm glad I reached out to you on Twitter. And if you'd like, Ernie, you could show your website so people would know how to find you if they have an interest in this. And, perhaps, there we go. What kind of trader are you? Okay.
So it's traderoffutures.com.
Right,
Yep. Like I said, I take on a few people each month to teach them this system. I really don't have the time to do anything other than that because all the training that I do is one-on-one. I don't give people a course and then maybe talk to them for 15 minutes. It would be just like this over GoToWebinar or Skype, and I talk to people individually. And so I really don't have the time to take on a lot of people, but I want to make sure that anybody that I do take on can benefit from that one-to-one sort of a mentorship type of relationship.
Okay. And is there, besides that, any other offerings? You have products, I see, and you hold webinars, and you have a blog up there.
Well, I'm going to be doing a webinar with TradeStation next Tuesday, okay. But I don't have any of the information yet on my webinar page. I just created the webinar page, and I'm starting to do more webinars. Okay. But if you go back to the site, you'll start seeing more webinars being listed there. Right now, there are none.
Okay, Ernie.
I don't have products. Like I said, I trade client money. I trade my own money, so I don't have. I'm not in the business to try to sell products, but I do want to help some people, and I'm willing to take on a few people.
Okay, Ernie. Well, thank you so much for being with us today. It was great to meet you, and thank you for opening up and sharing your journey with us and your philosophy of trading. It was a great interview.
I really appreciate it.
I wish you nothing but success for you and whoever you touch with your words and your teachings, that they achieve what you have with less pain.
Yeah, that's it.
That's my hope.
Yeah, mine too. Minimize pain. It's a great way to go.
All right, thank you, my trading warrior brother. Ernie, you could follow Ernie at Trader of Futures, and you're looking and you heard a veteran guy. There's probably not much he hasn't seen. Thanks again, Ernie.
Thank you, Dale. Take care.
Thanks everyone. Thank you, Face. Thank you, investing.com, for participating in our webinar today. Everyone enjoy their summer day, and most of all, remember, don't just count your pips, count your blessings. And we'll be back with you tomorrow to wrap up the week. Adios. You're welcome. You're welcome, guys. Glad to serve. Our mission here every day is to edify and build up traders. Adios.